All right, welcome back to the Youngest Real Estate Podcast. Today we're going to be talking about is the real estate market going to be crashing this year? Johanna, what are your thoughts? Is it going to crash?
I know you wanted to say JoJo.
Oh yeah, it's just eating away at me.
Is it going to crash? No.
Okay.
I don't think it's going to crash.
Why do you think people are saying it's going to crash? What's the why?
The why, I think, is the spread of, whether that be through social media or just the news or just media in general, the spread of a conversation, an uneducated conversation. So I will tell you straight up, I have enough information to have this conversation with you, or I don't. And I think that you and I spend enough time day to day dealing with not only buyers and sellers, but, appraisals, CMAs, like what is a home worth now compared to what it was worth 6 months ago? What is the influx of out of state and out of town buyers to our market? We're forced to be in the middle of this so that we can be good agents, so that we can be somewhat of a good agent to our clients. So I think that we have some sort of an educated opinion on this. I would say a very educated opinion, but I'm just going to say some sort of educated opinion in comparison to the majority of the people that are throwing out saying, hey, prices are skyrocketing, and I'm going to wait because there is a inevitable crash right around the corner.
How many times do you hear a week are you getting, I had a client send me a news article that was the market's going to crash. How many times do you hear people say that, or do you get articles or something like that?
I haven't had an article yet.
It's coming.
Oh, it is. I had 2 conversations this morning. You know what? I'm going to wait a year. You know what? I'm just going to wait. Prices are too high. They're going to, if you just think about the long term, because I'm very much a person that likes to think about the long term, because I think that any investment you make should be a long-term investment. I'm not one for day trading. I'm not one for, unless you are adding real value, such as in flipping or wholesaling or anything like that, you're not really bringing real value. So if you try and buy a home today and sell it in a year, more than likely you're going to lose on that, right? Because you're only looking a year out. A year is not a long time.
Well, so all right, but then that feeds in the next point. So people are having uneducated discussions about the market. They're going down that road, But I'll say and I'm going to kind of bounce off of what you were just saying, right? I think the reason why we're seeing people do that is because they're like, hey, these prices have went up so fast, and the only thing that they can correlate it to in their lifetime is 2008, right? Which is a horrible experience for a ton of people. Mm-hmm. And so you're having a bunch of uneducated conversations mixed in with PTSD of the past.
Fear.
Exactly, fear. And then, and so it doesn't matter what facts or anything else that show them. They're like, hey, I'm going to wait a year to see what happens. Because it's one of those things that they're like, all right, well, it's went up, it has to come down, mm-hmm. right? But if you look at 2008, and you and I both were talking about this prior to hopping on the podcast. The reason why the 2008 market crashed was because of the ninja loans, right? They had no income, they had no assets. People were buying houses that had no jobs, had no business qualifying, and yet they were getting pre-approved, and they're like, all right, go ahead, go buy a house.
It was a bad business model.
Oh, it was a bad business model, and real estate caused the crash. You know what I mean? The way that they were doing the mortgages caused the crash to happen.
Right.
Nothing like that's happening right now.
No, can you, tell me something about the way we are doing things now that calls for bad business. Loans are extremely hard to get for the majority. I will tell you, unfortunately, about 30% of the people that reach out to lenders when they're ready to buy aren't ready. They're not qualified.
Not to mention they make sure to do digging, and there's a piece of paper that they give you at closing about 10 to 15 times that make sure that they tell you, hey, if you're lying about this, you're going to serve 2 to 99 years.
Exactly.
And that's what we call mortgage fraud.
And at this point, the underwriter has asked for every last gas receipt,
yes.
in the past 10 years. So that is not a bad business model to me. To me, it's like when you invest in the stock market. You should look at the business, and is it a good business model? Does it make sense? Okay, then it should do good in the long run, right? Yep. Are they doing something right? So what are we doing wrong in real estate, or what is just the housing market doing wrong in general that could cause for a crash? And I just don't see it. Why are prices going up? It's not that prices are going up. It's that the buyer is needing to pay more because there's more competition. Because interest rates were so low.
If you break it down to its simplest form, it's supply and demand. The supply is so low, and I tell people all this all the time. and here's what I'll say: we can't speak for like the nation as a whole, but especially in the DFW where we are market experts and then some. It's one of those things that there's just not enough homes to supply the number of buyers, and so long as that rule rings true, you're not going to see these numbers going anywhere. You're not going to see this market crash. It's just not going to happen. Would you agree with that?
I agree, because everything that is going over the market value is being bought in cash. Like, it's being covered by cash. We're not losing offers to bad loans. We're not losing offers to buyers who say they can afford and then can't. We're losing them to people who are paying hard cash that is sitting in this asset. So there's nothing that could cause that asset. I mean, that asset is now worth the $550 that the buyer said he was willing to pay and the seller was willing to sell for.
So now what do you say to the people who are like, there were a lot of people in COVID who got behind on their mortgages, and I know you and I both heard this objection. A bunch of people fell behind on their mortgages during COVID. There's a foreclosure wave coming. That's what's going to make the market tank. What do you tell people whenever you hear that?
The majority of the people that were taking on these foreclosure forbearances, I think, were just to kind of delay a payment that they didn't want to make, not that they couldn't make.
Well, and I'll even go a step further. I mean, I think that there were definitely people who unfortunately lost their jobs or did things like that during COVID and maybe got behind. But if you also look at what houses back in 2020 were selling for. The same house that was $300,000 is now worth $500,000. And even whenever you get behind on your mortgage, yes, those fees and penalties rack up very, very quick and they end up becoming extremely expensive. But if you look at it, let's just say they incur $100,000 onto what they owed on that house. They're still $100,000. They're still $50,000 to $100,000 up with how much the market's appreciated. And I'm obviously that's an extreme example, but even the people that were behind by this point at 2022, they don't have to shortcut the market because they have so much room to get out of their situation that they don't have to shortcut and say, hey, I'm going to go off and sell my house for pennies on the dollar. That they don't have to.
Yeah, I think COVID did to the housing market what it did to technology. I think we were going to accelerate the use of Zoom, the use of QR codes, the use of just hands-off, being more efficient in every aspect that we could because we had to, because we were locked down, because I couldn't access you physically. So now I have to use technology. So it's forcing me to learn something that might have taken 5 or 10 years. I had to learn it in the span of these past 2 years because COVID made us do that. With the housing market, I think COVID made the market get to a point where it needed to be because everything was so underpriced and undervalued. I don't think that we inherently understood the importance of the space that you live in day to day and how much time people actually spend in it now, more so than prior to the pandemic, I believe, and what that space does to you internally.
You know what, you bring up a great point that a lot of people don't have. I actually haven't heard this perspective on it, but I like that because it's one of those things like, what if the values aren't, people want to say they're overinflated. What if they're not? What if we've just been lagging behind for so many years on what houses are truly selling for, right? And you bring up a great point because, at the end of the day, a house is what somebody's willing to pay for, right? And people are obviously showing that where they live, where they spend the majority of their time, where their office is going to be out of, which a lot of people are working from home, is ultra important to them. And then so they're going to pay a premium for that, you know?
Exactly. So, like, if I now have the option, like, it doesn't make, and maybe I'm getting sidetracked, but I think for a lot of big, call centers and places, like businesses that function, that work in that manner, why would I pay for this space, this retail commercial space, when my employees are showing that they are as productive, maybe, I need to look at the stats, but as productive as they were in office, maybe some people more, maybe some more people less, on average, probably as productive at home. And then they can create a space at home where they feel, not only they feel that they're actually producing, but they feel comfortable, and they don't have to drive 30 minutes to an hour, and they don't have to spend gas, and they don't have to tear up their vehicles. Like, it just makes sense. So then you go back to the homeowner and say, well, okay, I actually don't need 2,000 square feet in the place that I was never at, because now I need 3,000 square feet in a place that I enjoy because I've made this space my own, because I realize this is home. And now, after COVID, I just think that, I mean, if there was numbers, we just spend more time at home now.
So, all right. So I want to take this conversation in a different direction as well. What are you seeing in terms of, what the market's doing right now, right? Because it is, like I'll tell you my personal experience. I mean, I tell people this all the time. The amount of people that we have moving here from California, Illinois, New York is insane. Not to mention the first-time home buyers that are coming out of the woodworks. These people that just have cash on cash on cash, and you're like, where have you been?
Yep.
What have you waited for? Like, waited for what? And you have just like $100,000 sitting there. What?
I think they're coming into an underrated market, an overlooked market for the longest part. It's balancing out from an overrated market, right? That is also balancing out. I think that's just what's happening. It's just a natural balance that was accelerated because of COVID.
So, but with this change, what are you seeing right now? Right. So like people are saying, oh, the market's going to crash. The market's going to crash. In terms of what you're seeing in the market, are you still seeing multiple offers? Are you seeing things slow down? Interest rates are obviously going up. That's the talk of the town right now, right? You can't talk to anybody about real estate without mentioning interest rates. So what are you seeing with the interest rates going up?
Yes, multiple offers are slowing down. Absolutely. Homes are sitting longer. Now you actually have to be a listing agent, right? Yeah. Now you actually have to price it realistically. Now you actually might have to touch base with your sellers on Tuesday when you don't have an offer versus when you had 10 offers on Sunday and you didn't even have to pick up the phone after the initial conversation. So as an agent, it's going to make you, well, see, and here's my...
I just want to say something real quick. With all of that being said, that doesn't mean the market's crashing as well. So that's actually, we've been riding like an extreme high, extreme high. So go ahead. I'm sorry.
No, and I just had this conversation this morning, and in fact, the client she was like, I heard her kind of, take a moment, take a pause, and she's like, okay, I'll call you back, because I said it's slowing down, but we're still on that, like I'll put it in, we're still on that high. Like, it's just a lower high. It doesn't make
they're still going to, all right, instead of having 20% worth of appreciation again this year, okay, we're only going to have 10%.
Well,
guys,
I'm sorry.
Let's put that in historical terms. That's insane.
Yeah.
That's insane. The average year-on-year appreciation, I want to say, is like 3 to 5%, right?
Yeah.
And so basically, let's just work off the 3 number. You're tripling, like that number, 10% is still an absurd number.
Right.
And that's where I think, unfortunately, people, especially in the DFW over the past, let's just go ahead and call it 5 to 7 years, have been spoiled that they've moved into these homes and they've just had massive gains worth of appreciation. That's not what your expectation should be whenever you're buying a house, right? It's similar to what you said. You're buying real estate because, it's a hedge against inflation. It's one of the safest investments that you can make. But to go off and buy a house and 3 years later be able to sell it for $150,000 more than what you bought it for.
That's not normal.
That's insane. But unfortunately, there's so many buyers who are like, if I'm not going to make $150,000 in 3 years, if I need to sell, I don't want to buy. And it's like, but that's not the expectations are not realistic with what's happening. That doesn't mean that the market's crashing. That just means that you're not having a historical market that we've never seen before.
And I don't consider myself dishonest. I consider myself a very honest and transparent person, and I'm not going to force you one direction or the other. However, we as agents have a huge influence on our clients.
Of course.
Fortunately or unfortunately, whether if you know how to guide that conversation and if you're being completely honest with them, and if
you also have to present the facts, though, right? So, like, I spoke to 2 people this morning, and I'm going to use them as prime examples. They're like, one guy was like, hey, my lease is up in, like, 45 days. I think it's going to be too much stress, and I'm like, listen, I can't tell you about that part. Mm-hmm. But what I will tell you is that they're projecting another 10% worth of appreciation this year. We know prices are going to continue to appreciate so long as the inventory is low. And if you wait to purchase a year from now, there's the chance that you miss out. Let's just even say worst case scenario, you're missing out on 5 to 7% worth of appreciation, right? Let's work off that 5% number. If you're buying a $300,000 house, that's $15,000. If you're telling me that you don't need $15,000, I want to come and live with you because, you're living a life I want to live. So.
So you take that conversation. If you want to be a sincere and strong agent that's going to succeed through this quote unquote market crash, because unfortunately, if enough media sources and enough people are telling your buyers and your sellers that a market crash is coming, they're going to believe it, and whatever they believe is their reality, which makes it a reality.
I disagree with that statement. Here's what I'll say. I think that I like where you're going up until the reality point, right? I think that what we're going to see is I think that if you have enough people say, oh, the market's crashing, I think you may see a lull maybe for a week, 2 weeks, 3 weeks. But here's the thing. People are going to have to continue to have places to live. And nothing's going to stop that. People are always going to be moving.
That is true.
And with the number, so once again, so long as the supply is low, and it's going to keep on creeping up through the end of the year, right? Because it has to. I mean, we have to eventually get back to a stabilized market. Like it's coming, right? Like I'm not sitting here saying that we're going to ride this high for forever, because that's not the case. But there's a difference between the market stabilizing and the market crashing. And I think that that's where people mix those two up.
I agree. Unfortunately, people make decisions in an instant, right?
Yep.
So in that instant, they're going to renew that 1-year lease, that 2-year lease. That's going to lock them in. And then by the time that lease is up, that same home that they were looking at $300K is now worth $400K.
Well, and I want to bring up a point that a lot of people unfortunately don't talk about, agents, consumers, news outlets, is that look at how many people are leasing right now, and their leases are coming up, and their leases are being renewed for $700 more than what their lease amount was. That's insane.
Right.
That's
so
crazy.
Right. So
and then
you
they're
turn on the TV and you hear people and you hear the media saying prices are high, it's unaffordable, interest rates are skyrocketing. Well, oh my God, I need to renew my lease because there's no way I can afford a house before they even get to you as an agent.
But then they're getting shot with these, hey, your rent's going to go up $700. And these are the same people who are like, hey, I'm going to wait for the market to crash. I'm going to wait for the market to crash. Here's the thing, and this is my sole opinion, right? Just bought a house, and I'm a firm believer that if you are comfortable at whatever payment that you're pre-approved for, go off and buy, right? And because here's the thing, you're either buying a house for yourself or you're buying a house for your landlord. And that's how you have to look at it. So whether or not the market crashes or not, here's the thing. If you don't plan on selling in the next 2 to 3 years, you're going to win. The average recession, I want to say, lasts about, what was it? I think it's like 24 months, right? So, all right, let's say that you just get kicked in the gut for 2 years and you make it through and you survive and you're paying your payments. You're just focusing, putting your head down. You're going to come on the other side on top. And so you're either going to buy a house for yourself or you're going to buy a house for your landlord.
I agree. And I am not saying that a market crash is a reality.
Yeah.
I'm saying that it is that person's reality.
Of course.
So how do you as an agent, now when you couldn't get this buyer under contract because, there was 30 offers on every home that y'all looked at, and then you find a home and then their interest rate goes up. So then they're like, oh, well, my monthly just went up by this much. And the media is telling me that everything is just going, sideways. So I'm just going to rent, which I just had happen to me. And I am very fearful for this client because I know their situation. I got to know them, at a personal level. And I wholeheartedly believe that the best decision for them and their growing family would have been to purchase. And
Yep.
they are now going to rent because of uneducated conversations, and not on their end, but external. So how do you as an agent continue moving forward when you are losing these buyers, when all these buyers are telling you, and then when you have pushback from the buyers, and then when sellers are also telling you, well, I thought I could get this much, I don't think I can get it anymore. So how do you continue? How do you move forward? It's not a real market crash, but it is, because enough people are saying that it is.
Here's what I'll tell you. I think that's where, it's you've got to learn how to differentiate. You got to learn how to show yourself different from all these other agents, because you have to be able to interpret the data. And I'm going to tell you, if you're just regurgitating what people are going to say, you're going to struggle in the next couple of years.
You have to understand what you're saying.
You have to understand what you're saying, and
Yes.
you have to be able to relay the numbers. Because I'm going to tell you, people are going to start asking these tough questions. People are going to have to start having tough discussions. And whenever here's the thing, you have to tell them, you have to be like, listen, numbers lie, people can lie, your kids can lie, numbers can't lie, so let's look through these numbers and let's see what the market's doing. Let's not go off of what the media is saying. Let's not go off of what, uneducated people are saying. Let's look at the data and let's make the best decision for you and your family. If that means not buying a house, that means not buying a house.
Right.
But for the most part, for most people in the position of saying, hey, I'm going to hold off even though I was pre-approved, it's, in my opinion, it's not the right decision because the market's not crashing, and it's unfortunately the DFW. It's only going to keep on going up.
Exactly.
You might as well go ahead and get on the roller coaster and ride it up.
Yep.
So.
And that's the thing is, I think now as an agent, you actually have to be intentional about being educated, about educating yourself.
Yes.
If you're not in the right room with the right people, then go out of your way to educate yourself from the right sources, whatever that looks like for you. Educate yourself, because those conversations,
and on the market,
right, those conversations could lose you a listing. They could lose you a buyer. I mean, I've lost a buy sell. I've lost a buyer just in the last week from that. I had the conversations, but you can only push them so far, right?
Yeah.
And
Well,
I'm not trying to.
Well, there's some people who it just doesn't make sense for them to buy and sell, right? And I'm not saying sit here and push every single one of them, but look through each of their situation, and if their reason for moving is something other than, hey, or if their only reason not to move is, hey, the market's going to crash, well, let's show them the numbers. So. But guys, I mean, we're curious to hear y'all's opinions. Drop a comment below. Let us know if you think that the market's crashing and why. Other than that, like and subscribe, and we look forward to seeing you next time.
Or why it's not crashing.
Or why it's not crashing, yes.